even though by this point I've made it pretty clear if you've watched my videos in the past that I have sort of a set group of different stocks and ETFs I buy pretty consistently, over time my strategy has changed a little bit, and as of recently I have been grabbing some newer names that you might have missed if you haven't been following along. So in this video, I simply want to go through and share with you guys 5 different high quality dividend paying ETFs that I've been buying like crazy over the past several months, and explain exactly my thought process on why I'm choosing these specific names, just knowing there's so many ETFs and stocks of course to choose from. Now these ETFs offer dividends, dividend growth and like I said are high quality, some of the highest quality in their class. So if you want to see which 5 names I've been buying like crazy as of recently, make sure to stick around, drop a like down below, and let's get right into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now the first dividend paying ETF that I have been buying once again as of recently, and this has been a newer ETF on my buy list, not that it's an ETF that I haven't been holding for a while, but I just haven't really added to the position in some time. I'm talking about DIVO, ticker symbol DIVO, or the Amplify CWP Enhanced Dividend Income ETF. Now it really does sort of feel like all roads lead back to DIVO, because in the past whenever I don't really know what to buy, if I'm sort of unsure about a new position, I always think that DIVO is sort of a safe pick. And this is because DIVO offers some growth as far as capital appreciation. It offers some downside protection because of the cover call overlay, but also on top of that, as of recent, DIVO's been paying more and more as far as monthly dividends go, and along with that, DIVO's offering almost a 5% starting yield. But if you guys aren't familiar with DIVO, real quick here, DIVO offers income potential. It's actively managed, but along with that, DIVO does have a cover call overlay, which allows DIVO to offer a lot more income potential than what would normally be able to be had with the type of holdings that DIVO buys into. Now, even though DIVO is on the pricier end of things, it's currently trading basically at the 52-week high and the all-time highs right now. DIVO is getting pretty pricey. I still always go back to DIVO, like I said, when I do want to deploy more cash into the market, which as of right now I have been, but I don't really know what to buy into. DIVO is up around 64%, and this is since 2016, almost 2017. But along with that, DIVO offers a 4.5% trailing 12-month dividend yield, which, just to note, as of recently, DIVO's payouts have been getting larger. Back in the day, DIVO was paying anywhere from around 14, maybe 15 cents per share per month. Now, as of recent, we've been getting some 16-cent plus payouts, which has been amazing. All to say that DIVO is one of my larger positions as far as ETFs go, and to be completely honest, I've been utilizing some cash balance back to DIVO as of recent. Another one of my absolute favorites as of right now that I have been buying like crazy, that I wish I could buy a lot more of if of course it dips in price, is ticker symbol GPIX, the Goldman Sachs 500 Core Premium Income ETF. I did make a video about this one as of recently, so definitely check it out. But this ETF basically offers a lot of the things I love about cover call style ETFs, but even offers more than that. Now this is simply because this ETF, like lots of other cover call ETFs, basically tracks an index, in this case the S&P 500, but then dynamically sells call options, which allows participation in rising equity markets. So because of the dynamic cover call overlay with this one, you can basically earn potentially a lot of cash every month, but also seek some upside along with it. Now this ETF, although it's pretty new, it's done amazing. It's up around 25+%, but along with that, it's been paying out 30 to 34 cents consistently since inception, which offers a pretty competitive yield in the cover call space. And even though there's higher yielding options out there with GPIX, I do think this one's going to have some nice upside potential, just like jepi and others, so I have been grabbing some more shares of this one. And like I said, this one is going to be very high up on my watch list. If of course there's a dip in the market, I'll probably go a lot deeper on this. Another ETF that I have been buying more of as of recently is SPYI, the NEOS S&P 500 High Income ETF. And this is simply because, just like GPIX, I really like the strategy that SPYI and NEOS deploys. Now this ETF is tax efficient, it offers some potential upside, and on top of that, the distributions have been steadily around 48 cents, 49 cents, or even above 50 or 55 cents as of recent that we saw back in August. Now I will say my position of SPYI is getting a little bit overweight, so I probably am going to be pretty close to capping this out. But just as of recently, I have been buying some more shares, sort of finishing off what I started with SPYI. And if you guys have been following along for a while, you know I'm a huge fan of this one. And at least so far, knock on wood, it's done very well for the portfolio. It's traded more or less sideways, up a little bit to the right, but along with that, been paying massive distributions consistently every single month, which I cannot complain about. Now, another few ETFs that I've been buying as of recently, this one like crazy, SCHD of course, we got the new news of the dividend increase, and we also have the crazy news that there's going to be a 3-for-1 share split. Now, this is extremely bullish in my point of view. I'm very excited to have 3 times as many shares in my portfolio of SCHD, even though they're going to be 1/3 the price. I'm super excited for the future of this one, and I think we're going to see an all-time high from SCHD very soon here. Along with it, the fact that this ETF is consistently paying us still more and more income consistently. The most recent dividend announced was around 15% larger from the previous third quarter dividend last year. So in short, SCHD is doing its job, and I'm going to stack as many shares of it as I can within reason throughout the rest of this year. Now, last but not least, this might be sort of a curveball to you guys. This is also one that I've been buying a little bit more as of recently. I started off grabbing a share of VIG maybe every other week and then once a week. And now as of recent, I've even grabbed an extra share here and there. Now I'm talking about the Vanguard Dividend Appreciation ETF. You guys have probably heard of it. It's a very popular one in the dividend growth community. Now, the reason I really like VIG is because it's extremely diversified, and also some of the top names, although very familiar, I don't necessarily have that much exposure to some of the names. So names like Visa, I want more exposure to. Names like United Health Group, even things like Microsoft, I don't have all that much exposure to. I of course do own 1001 shares of Apple stock, so I already have quite a bit of Apple, but the names within VIG, although there's some overlap of that of SCHD, I want more exposure to some of these dividend growth names, because after all, these dividend growth ETFs, I'm talking VIG, SCHD, VYM, etc., they basically over time have been just proving to us, at least based off of historical data, that they're going to pay us more and more cash flow over the years. And of course, something can change in the future, but as you can see right here, VIG, along with the others, has also been paying larger and larger dividends every quarter consistently, basically every single year over year. So even though I am still chasing a high amount of dividend income and VIG only has around a 1.73% trailing 12-month dividend yield, VIG as a long-term hold still is offering exactly what I'm looking for in this market that's basically trading at all-time highs across the board. So those are 5 different dividend paying ETFs that I have been buying a lot as of recently. Like I said, a lot of the names are familiar, but over the months, over the years, my strategy, although it's pretty set in stone, is always going to shift around a little bit to the left and a little bit to the right. Now, because I love to tell you guys all my goals and I'd love for you guys to follow along, right now my 2024 goal, it of course can change, but right now I want to get to the point to where this portfolio, all my stocks, all my ETFs combined, can pay me upwards of $7,700 per month in dividends. Now we're currently at just over 7,400, so we do have a lot of work to do. It's going to take a lot of buying, a lot of reinvesting dividends, but if we work really hard and push, I think we can get there. But now, most importantly, I want to hear from you guys down below. As of recent, what are some of your top buys as far as stocks or ETFs? Drop the ticker symbols in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.